Good morning, good afternoon, good evening, traders from across the globe, and welcome to Short Term Trading Live with Oscar's weekend webinar. Traders, here we are again, another weekend webinar, and as you know, I like to use this time on the weekends to keep us in focus of the larger picture. And the larger picture basically says one thing to me, and you know what that is? Don't fall in love with the upside, traders. I've done a lot of homework. I've looked at markets around the globe, and I am here to say, traders, you should not be listening to this euphoric news. You should be not listening to these CNBC types that are calling for the moonshot. I am going to show you some charts in a couple of moments. I think you will understand why I am here to say don't fall in love with the upside yet. Yes, traders, I would love to be a bull. Yes, of course, at some point our market will become bullish again. But what we're experiencing now is a simple bounce in a bear market. And when we hit certain levels, we are going to come right back down again. Traders, the economy has not fixed itself. The rest of the world, including the United States, of course, is having grave difficulties in the economy. And we've had a little bit of a bounce, but a bounce is expected after such a breakdown that we've seen in all the world indices lately. So, I want to show you the charts. Last video that we did, you know, I came out, I did some charts after having that little baby episode with all of you. I did some charts, and in the charts, actually, I only put up one. And I talked about the possibility of a 2-day rule taking effect, right? Now, we are traders and we are analysts, so we don't just step ahead of anything. With the 2-day rule, it didn't work. We didn't sell into it, by the way. We just watched the market. We tested it a little bit. It went past 2 days up in a bear market. So we backed off and said, okay, this little rally here is a little stronger than a 2-day rule type rally, where it is we wait for 2 days up in a bear market and sell. So we have had 4, maybe 5 days up. And that's enough to make me say, well, there's a little more likely coming, but a little more, and then we sidestep it and wait for the turn. Now, traders, if you're a technical analyst, you'll see that the indicators on most of the world's indices are already beginning to get tired on the upside. And if the indicators are already getting tired and we've only had a 4 or 5 day rally, well, that tells you that this rally is petering out already. Now, I'd like to take you into some charts. You know what? Let me not say anything else. Let's go look at the charts first. I think you will find them quite interesting, and you'll see why I will not fall in love with this upside rally. Let's go to the charts, traders. Okay, traders, what you're looking at now is the June S&P daily bar chart. The June. This is actually the cash SPY. Same chart, same market, but the cash has a little nicer look to it, so I thought I'd go with that for the video. Okay, traders. If you take a look at what's going on here, we have come down quite a bit. Important, what has happened is we have gotten below the previous lows, bounced back up a little, but look at this major resistance right here. You've had trouble getting through it on the downside at this arrow, at this arrow, at this arrow, at this arrow. There's actually 4 that belong right there. Then up here, you couldn't get, you had some trouble trying to get through it, and then it tried to get back above and could not. And then we nosedive. So you actually have this resistance right here above the market. At the same time, you have a parallel channel that we've been in, traders, which is a very interesting one. You can see it's clearly defined. So you have a parallel channel. So if we have major resistance coming across the chart, the top of a parallel channel where we've hit bottom, top, bottom, top, bottom, went through the bottom slightly and is now heading towards the top. And likely what will happen is, as soon as we hit the top here, we turn and we break. Now, what I find interesting is that indicators are already beginning to look like they will follow right in suit with that very same bit of price action. So I looked at that and said, well, very interesting. Let me continue to look at a few other charts and see where this is going. So I started scanning charts from around the globe and, of course, all the U.S. indices. And I came up with a few more examples. Let's go look. Okay, traders, the first one of the other indices, which are non-U.S., is the DAX. Look at the June DAX. Look at the major resistance I pointed out to you, which also showed up in the S&P. But it is major resistance for the DAX. Look at the size of this trend channel that we're in. We've hit top, bottom, and we are near the top now. And at the same time you hit the top, you'll be running into this resistance as well. That, my friends, is a sweet spot. That is what you would be selling into. So as you can see, you do not want to fall in love with the upside here. Again, you've seen the S&P. You're looking at the DAX. The DAX looks even worse. It looks like it's tired already. You may get 1 or 2 more days out of DAX. You may. That's a big word here, because I don't even know if it's got the legs for that. But at this point in time, we're in the middle of this little rally, and we'll let it rally up until the sweet spot. And then we'll sidestep it. And if it fails at the sweet spot, we jump in and we know our direction. And it'll make it a pretty high percentage trade, I would think, if in fact it fails right there. I think selling it into that would be a smart play, but we will take one day at a time. We might have to buy it on Monday until it gets up there. But we're day traders, so that doesn't really matter as long as we're timing it correctly when we look for the downside again. All right, traders, so that's the DAX. Again, look at the size of this channel and look at all the action within it. What should make this go above that channel? Are buyers going to come out of the woodwork? Has Germany already fixed their economy? Do they know something that we don't? I don't think so. So you've seen S&P, and now we're looking at the German DAX. Let's look at another chart here, traders. Okay, traders, from my fans from across the pond. Hello, all you fans from London. I have something that I'd like to show you with your market. The FTSE looks very much like the DAX when it comes to the size of this parallel channel here and the way it's been tagging it top and bottom. It's larger in its scope and its size than is the S&P channel. And look, we're heading towards that sweet spot already. Sweet spot comes in around the 39.40s. We're already trading in the 37s. There's not a lot of room for the upside here. So if we rally and get back to this spot like it did here, and here, why wouldn't it fail right there? And on top of that, look at this resistance line that comes across. It cuts right through this whole area. And look at all the times that you can see us bounce off that line. So you have the resistance line from above, right? We went through it, and now it's going to be resistance above. And it comes in right at the same spot as the top of the parallel. Sweet spot, baby! That's what I think it's going to be. Let's see what happens here. Traders, there's one more chart I'd like to show you. Okay, traders, what we're looking at here is the Dow Jones Transportation Average. And as you know, we consider the Dow Jones Transportation Average the leader of the indices as far as the major trend or the big picture is concerned, right? With that in mind, look at this fact that we have before our eyes. This line represents previous lows, where we broke down from. In other words, we came down and stopped and went back up, right? Then we finally broke down again through previous lows. We're here. We got the channel just like we have in the other indices. We have previous lows that come in all the way back up here. The leader says, forget about it. I don't even want to test my previous lows before I go back down, because if you get to the top of the channel here, it is lower than previous lows. The leader is telling us that it does not want to go very high. The leader is telling us you better watch out for the downside, and if you get a few more rally days, you want to sell into them. Remember, the other 3 charts I just showed you, we got above previous lows. The leader has not even tried to get there. It's gone up very little, and it's faltering already. So traders, do your homework on this. The leader says it won't happen. The rest of the world indices say there's definitely going to be some selling coming in shortly if it doesn't come in right away. So again, do not fall in love with the upside. Do not fall in love with the upside here, traders. I don't want to see you do it. Now, we are day traders. If in fact we get above this whole mess and it starts to build steam, well, hey, I'll jump right in the bull camp with the rest of us. But I don't think that's what's coming. In fact, if we get above this, what I call sweet spot for the week, then we have to go back and look at what happened to the head and shoulders, and then what we're going to get is basically a test of the middle of the head. There is a lot of work to be done on the downside before we can go higher. Do your homework, traders. Do not get caught. This rally will very likely taper off. So, traders, you've seen those charts? I mean, look, you can see those parallel channels. They're clearly defined. How many videos have I done before your eyes where I gave you a parallel channel and said the market is respecting it, you should respect it as well? How many of those videos turned out to be winning videos, or at least turned out to be videos on the right side of the market? From my memory, almost all of them, traders. Very rarely have we had one of those channels violated, unless, of course, the channel was done and it was off to another direction. But being that we're day traders, thank goodness for that, baby. We know how to flip. We know how to get long. We know how to get short. We caught the market on Friday being long. We caught it on Tuesday being long. We had a couple of chop days in between. We had that losing day, but barring that, we've been able to play with this and not get tagged too badly. So, with that in mind, with this counter trend movement that we're seeing, you got to be very nimble if you do choose to play the long side. There are two ways to trade this little rally that we've had, traders, starting with tonight, Sunday or Monday. This is actually Saturday, right? Starting with Sunday into Monday, there's really two ways to trade this channel. You either back away and let it rally and see what happens and don't do anything if you're a bear until it gets there and fails. Or you simply buy into it until it gets there, get yourself out and sidestep it for a little while and see what happens next. Traders, trading counter trend, which means buying in a bear market, is dangerous and can be very costly. Make sure you put your stops in, make sure you place them first. But if you need to be a buyer here, don't be afraid of it. Just don't fall in love with the upside. All right? A couple of days up is a couple of days up. This bear market's been going down for a long time. 4 or 5 days up does not turn it into a bull. Keep your wits about you here, traders. I want you to stay in tune with what's happening in the larger picture. Don't fall for this little rally that we're having to think that the bottom is in. All right, traders, so I don't think I want to do too much in this video because I got a good friend in town, and he's in Vegas, baby, and you know what happens in this town, right? Well, we are going to tear up the town, and I want to get out of here. Dave, come up and say hello, Dave. This is my lifelong buddy, Staten Island, back from home. Thanks for coming, Trey. Hey, what do you think about Vegas so far?
Love it, love it.
Great town, right?
Stay out of the casinos. Come to Omnicam.
Yeah,
make
way
your
to
money.
go. And we're here to tell you one thing, and you know what that is, traders, right? Stops are in. Emotions are out. Yeah, baby. Welcome to Vegas.
Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided. That being said, I'm a 27-year seasoned trader on and off the trading floors. This is how I've made my living for many, many years.